I'm very sure you know that feeling. You get a big payment from a client and for a moment you feel great. But then you pay rent, cover some bills, maybe an unexpected expense, and suddenly, this big payment has vanished. You're left wondering where did it all go and feeling like you're stuck in a cycle of earning but never actually getting ahead. The problem isn't how much you're making, it's how your money moves. And in this video, I'm going to give you a simple step-by-step system that puts you in complete control. We are not just talking about budgeting. We are talking about building a machine that automatically directs your money and the financial stress and finally lets you build real lasting wealth for the hard work you're already doing. Hi everyone, this is George and welcome to another Consulting Tuesdays video. So before we get into the how-to, let's get crystal clear on the what. A lot of people think income and cash flow are the same thing, but they are really not. Income is the money you earn. Cash flow is simply the movement of money in and out of your life. You can have a great income, but if your outflows, your expenses, your bills, your taxes are badly timed or just bigger than your inflows, you're going to feel broke. Positive cash flow is when more money is coming in than going out. That surplus is what lets you save, invest, and just breathe. Negative cash flow is the opposite, and it's the source of all that financial anxiety. For freelancers, this whole thing gets even more complicated because your personal and business finances are so tangled together. A client paying late doesn't just hurt the business, it impacts your ability to pay your own rent. That's why mastering this isn't just a good business practice, it's an essential life skill. The goal here isn't to build some painful, restrictive budgeting. It's to build a system that automatically directs your money where you want it to go. The very first thing you have to do, and this is non-negotiable, especially for freelancers, is to separate your financial worlds. Mixing personal and business money is like trying to have a conversation in a room where everyone is shouting. It's chaotic. You can't hear anything clearly and you're bound to miss something important. So here's what you do. Go open a separate bank account, just for your business or freelance income. Every single client payment goes into this account, all of them. And every business-related expense, like software, new gear, co-working fees, comes out of this account. Why is this one change so powerful? First of all, it gives you instant clarity. You can look at that account and know the financial health of your business in a second. Secondly, it makes tax time about 1,000 times easier because all your deductions are already sorted in one place. And if you're not a freelancer, this principle still works. Create separate accounts for different things. At the very least, you have your main checking account for bills and spending and a separate savings account that you don't touch. That separation creates a little bit of healthy friction, makes it harder to accidentally dip into your savings. The idea is to create different buckets for your money so every dollar has a job. Once this business account is set up, the next step is to give yourself a predictable income, even if your freelance work is anything but predictable. You need to pay yourself a regular salary. This is probably the biggest secret to smoothing out that feast or famine cycle that drives so many freelancers crazy. Here is how it works. First, figure out what your baseline monthly income really is. Look back at your earnings over the last 6 or 12 months and find the average. Or even better, find your lowest earning month. That number is your starting point. From there, decide on a fixed, consistent salary that you will transfer from your business account to your personal account either monthly or bi-weekly. This salary needs to be enough to cover all your personal living expenses, like rent, food, utilities, the works. On the good months, when you make more than your salary, that extra cash just stays in that business account, building up a buffer. In the lean months, you will draw from that buffer to pay yourself the exact same consistent amount. By the way, this is called a counter-cyclical fiscal policy if you were a government. And this is a total psychological game changer for individuals. It turns your unpredictable income into a steady paycheck, which lets you budget your personal life with confidence. It takes away the temptation to go on a spending spree after a big project and gets rid of the panic when things are a little bit slow. Alright, just let's pause here for a second. If you're already feeling a bit more in control, just think about this. Imagine how it's going to feel when you actually put it into practice. If you're getting some value out of this, do me a quick favor and hit that subscribe button and turn on notifications. I put out practical guides just like this one every week to help you manage your money and build the life you really want. Okay, so you're paying yourself a steady salary. What do you do with the money that's left over in the business account? You give every dollar a job using what I call the freelancer's financial Trinity. This means every payment that hits your business account gets split three ways, right away. First up, taxes. This one isn't optional. Of course it's not, as you must pay the government, unfortunately. As a freelancer, nobody is withholding taxes for you. So if you don't want a terrifying surprise at tax time, you have to do it yourself. Open a separate savings account and literally name it tax savings. Every single time you get paid, immediately transfer 25 to 30% of that payment into this account. This money is not yours. I say that again, it's the government's. Don't even think about touching it. Second, the cash buffer. Think of it as your business emergency fund. This is what covers your salary when you have a slow month, or what pays for a new laptop when yours suddenly dies. Your goal is to build a buffer that can cover 3 to 6 months of your business expenses plus your personal salary. Keep this in its own separate business savings account. And third, profit. Whatever is left after you have paid yourself, set aside tax money, and funded your buffer, that is your actual profit. This is money you can use to reinvest in your business, whether that's taking a course, upgrading equipment, or eventually giving yourself a well-deserved raise. The key to making this work is automation. Use your bank's automatic transfer features to move the money to your tax and buffer accounts that moment you get paid. Automation builds the habit for you so you never forget to save. Having a system is great, but it's not a set it and forget it machine. You still have to be an active participant. This really boils down to two things: tracking your money and being smart about how you invoice. First, you have to track your spending. You need to know where your money is actually going, both in your business and in your personal life. Use a budgeting app or even just a simple spreadsheet. This isn't about judging your choices, it's about gathering data. Once you see the patterns, you can make intentional decisions. You might realize you're wasting money on subscriptions you don't use, or that one client is actually costing you more in tools than they are paying you. Second, for freelancers, your invoicing is your power. Don't wait until the end of the month to send an invoice. Do it as soon as the work is done or a milestone is hit. Make your payment terms crystal clear. Due within 14 days or due in receipt. You can even consider offering a small discount for early payments or adding a late fee to encourage people to pay you on time. And for bigger projects, never agree to get paid only at the very end. You should negotiate for a 30 to 50% deposit upfront and payments at key milestones. This protects your cash flow and make sure you're not funding your client's project with your own money. Mastering your cash flow doesn't require some kind of financial wizardry. It's about building simple, intentional systems that put you back in control. So let's walk through that system one more time. First, separate your personal and business finances into two different accounts. 2. Pay yourself a consistent salary from your business to create stability. Number 3. With every payment you get immediately, set aside money for taxes and your business buffer. And the fourth element, actively manage everything by tracking your expenses and being strategic with your invoicing. This framework is what shifts you from feeling reactive and stressed to being proactive and in control. It turns your money from a source of anxiety into a tool for building a secure, stable, and ultimately a more free life. You work way too hard to constantly feel like you're behind. It's time to take control, not by earning more, but by managing your money better. The power has always been in your hands. So, what's the one step from this video that you're going to try to implement this week? Let me know down in the comments. I read every single one and I would love to hear about how it works for you. Thanks for watching, and I will see you on Thursday for an economics video on national debt, a critique on authority, and a trip to the accelerator that caused the pain of austerity during the global financial crisis. See you all. Bye bye.